Open mic 3. Now he should be an open mic 1. We should be good.
Three, two,
I got you transferred, brother. I got you transferred, brother. We are here, guys. Oh man, we got a full class, man. This is great. All right, all right, babe, get over here. So, I'm gonna go over it again real quick. We're gonna try to, because I'm recording now, guys. We are gonna go over a 9-day EMA strategy. We're gonna go over the 200 EMA strategy, and it is for swinging and scalping. So we're gonna be looking for two things, and it is the exact same two things to enter as it is to exit. So if you're wondering when you enter and when you exit, it's going to be on confirmation. You're always going to wait for the signal, but the signal means nothing without the confirmation, right? And we're going to go over that simplicity of a trading strategy now. It's really, really, really easy. It's really simple. We can use it on a 15-minute. We can use it on a 5-minute. We can use it on a 1 and 2-minute. We try to stay away from the 1 minute because it's a lot of noise. But more or less what we're going to do is learn those basics. We're going to use the book that I wrote to be able to explain the EMA. It's all in there, and it has an example for us to look at as well. And we're kind of just going to read it right out of the book so you guys have an understanding and you guys know that what we're reading is right out of context. If we need to go back, you guys have the book, and it's right there. And then I'm going to give you guys some live examples. In here, I'm obviously not going to make a trade on my funded account, but I mean, we might, but what we're going to do is at least kind of show you in the history how things work and how we're able to take the same trade and utilize it to make some money. So, babe. Okay, so, perfect. Troy's here too. We got a really big class going tonight. All right, awesome, man. I love this. I love to see this. I love to see this. All right, so the first things first is I don't know what everyone knows, but what I want to go over is the open and close of a candlestick. So we need to understand candlesticks and how they work. I'm assuming everybody understands that we trade futures. I'm assuming everyone understands that we trade in the NASDAQ market, sometimes the gold. Where this is very, very simple. What I'm wanting to teach you right now is technical analysis, right? Candlesticks analysis. However you want to take it, however you want to learn it. What I need you to write down right now is, or if you want to write down, or what you want to know and take into your head is a bullish and a bearish candlestick. A bullish candlestick is any candlestick that closes higher than it opens. It will open at 10. It closes at 15. That is a bullish candlestick. A bearish candlestick will be any candlestick that closes below the opening. If it is at 10 when it opens and closes at 5, that is a bearish candlestick. And I can show you a clean example right here in the book of what this candlestick will actually look like. That is the chart. That is going to be your bullish, which is green, up, or long. Multiple names for this bullish candlestick, multiple names for bearish, right? So it's going to be the high, the low, the open and close. This right here, where the color is at, is going to be called the body, right? The two pieces on top and bottom are going to be called the wick. That is your high and your low. At any point in time, this candle will start at an opening time. So each time frame is, let's just say 5 minutes. This candlestick will open on the first start of the 5 minute, and it will run down or up and all that until it closes. That is simplicity. Go through chapter 2, I do believe chapter 3, to understand the open and close of a candlestick. I don't want to focus on this too much, but just understand bullish and bearish candlesticks. If it is green, that's the default mechanism that you go to, is green. If it is green, it is a bullish candlestick. If it is red, it is a bearish candlestick, right? Everybody gather that? Everyone, any questions on that at all?
no.
Got it.
All right, perfect. All right, so Those are going to be your main. You have to learn how that candlestick moves. In order to learn how that candlestick moves, it's going to create confidence inside of you, and then you're going to be able to understand the market and what's going on. And the way we like to look at this is you're able to look at the bears and the bulls fight it out, right? If a candlestick is running up and you see this big body running up, and then all of a sudden you see it start pushing down and leaving behind a wick, you know the bears are saying, I'm not liking this. You guys are going to go back down. I don't like this price action. You guys are not coming this high. So think about, it running up and you just punching him in his face, and it's running down, right? Like he's laying down. Like that's how it works. Like you're going to have a candle that's full and you have a little wick and it's just going to melt itself away. Sometimes it gets really fast and pushes down. But what you're seeing is resistance. Anytime you see wick, you see resistance. Anytime you see body, you see momentum, you see gathering, you see price, you see volume. That is a good candlestick. We call that big candlestick, which is a full body, a Maribozu. That is why you need to learn your single candlestick patterns. The single candlestick pattern will come after you learn this, because if you don't understand the basics of opening and closing of a candlestick, you'll never understand what a bullish or bearish Maribozu is, because you don't know the difference between a bullish and bearish open and close. And that's literally just the simplest form. We got a Maribozu right here. These are forms of Maribozus, right? In trading, nothing is going to be exact. Nothing is going to be exact. If it is exact and it is beautiful and it is perfect, fucking jump. Put all your money in it. I don't give a shit. However you want to trade it. If it is perfect, go. And have the confidence, because it's never going to be exactly perfect. You will start to learn to trade, and as you start to learn to trade, we got another one. What's up, Sebastian? When we start to learn to trade, right, we're going to start asking friends, hey man, you see that cup and handle? And the guy's going to go, no, that's not a cup and handle. And he's going to be wrong, and he's the seasonal trader. He's the person that's been trading for 4 years, and he's telling you that's not a cup and handle, and then all of a sudden the cup and handle plays out, and you go, you were a liar. I was right, And that's the part that starts to eat at your confidence, right? So trust in yourself and trust what you're learning. Do not overindulge yourself in YouTube videos. Don't overindulge yourself in the basics. Literally just pay attention, study, and understand everything. When it comes to ICT, when it comes to all these other trading things, supply, demand, external, internal liquidity, just understand that everyone has a different name for the same word. Some people will call supply and demand external liquidity. It's the same thing. Some people will call supply and demand support and resistance. We got another one that's great. Some people will call supply and demand support and resistance. This is a big thing to understand, that you don't just keep overindulging in learning. You will stay indulging in videos for 3-4 years. Learn a strategy, take it and run with it, and practice. For instance, my 9-day EMA strategy I've been using for 4 years, and this is the strategy I like to scalp. I'm in and out of trades sometimes 100 times a day. Yes, I lose some. Yes, I win some. As you perfect the strategy, you're going to get better and better, seeing things you don't like when the strategy pops up. Sometimes you might not want to use this strategy. You want to use a different strategy. That's perfectly fine. But it's all going to come back to knowing your technical analysis and understanding how to read the chart. And it all comes from the first candlestick. If you don't know how it opens and closes, how it creates a high and a low inside of the 1 minute chart, the 5 minute chart, all of that, then you're not going to understand anything further. So you guys got to understand the open and close of a candlestick and how it creates a high and low when it closes. That is simply basics. Once you're able to get that down, you can study the single candlesticks, Maribozus, dojis, dragonflies, gravestone dojis, hammers, shooting stars, hangmans, inverted hammers. You can learn all those single candlestick patterns that you want, Maribozus, right? Spinning tops, spinning dojis, all of that. Then you take those single candlesticks and you combine them with another single candlestick, and those become double candlestick patterns, such as your piercing pattern, your bullish kickers, your bullish haramis and bearish, right? Dark cloud cover, stuff like that. We're able to see those. And those double candlestick patterns and even the single and triple candlestick patterns are what's going to signal and confirm our strategy. It's going to be as simple as that. And we're going to be able to show you guys how that's done inside of the actual, like on the actual chart. I'm going to show you guys multiple times so you guys can understand like what I'm looking at every time I enter. And it's literally, it's so simple. This stuff requires no math, unless you want to just add up your money and subtract your money that you win and lose, right? And all it takes is just looking at the chart, looking at a line that we're going to put a technical indicator, and we're going to run with it. It's an exponential moving average. It's based on weighted data, right? And it's going to be helpful. It kind of shows us where the market should be at on an average of everything and where it could be back, meaning that it should pull back to this line all the time. And once we create a certain signal and confirmation, we're able to run with this line until it shows us another signal and confirmation to get out, right? And it's a really, really easy strategy. So I think we covered the open and close of a candle. We've covered the Maribozu. I want to go over some double candlestick patterns because that's what we're going to be looking for more than anything. So one, study your open, high, open, close, low, your opening of a candle. Study your single, double, and triple candlestick patterns. This is what makes this class so quick, so easy. It is literally going to come to you after this class. If you don't take it any step further after this class, it's because you didn't do the studying and you don't have questions for me, right? If you study and you do this class and there's not something that's, clicking, and something is clicking, I know you're going to be asking me questions. You're going to want another class. You're going to say, hey, Daniel, when can we have another one of these nights? And this is a great turnout. Read the opening, the close, the highs, the lows, learn the opening of a candle and how they work. You're going to obviously need to learn time frames on your own chart, but this will allow you guys to kind of just start looking at a chart and knowing what you're seeing. So the person next to you pulls out their phone and you're going to go, oh, that's a Maribozu. Even though you don't know what you're looking at, it's still a candlestick. And the reason why I want you guys to understand this stuff is so that when we're looking at a chart, let me bring up the chart, we're looking at these candlesticks, you guys know what I'm looking at. Right now, you have no idea what you're looking at. You're like, what the fuck is this? Right? Well, we have different forms of bearish Maribozus and bullish Maribozus and hammers and hangmans and spinning tops and dragonflies and spinning dojis. And what is all of this? This is a lot, right? This is a lot. So I'm going to jump right over here to the strategy I called yesterday that actually passed my funded account last night. I passed both of my accounts last night with. This is on a 15-minute chart. This is on a 15-minute chart. And this is going to be every candlestick that you see is going to require a open and close, high and low after 15 minutes. So it will open, and then for 15 minutes it will move. It'll create a low and a high, and then it'll eventually close at the end of the 15 minutes, and then another candlestick will open for 15 minutes and go up and down. That's how the time frames and charts work, right? Does that make sense? Yeah? We're all good? All right.
Yeah.
All right, perfect. If I'm going too fast, just have someone stop me. If there's something that's not understanding, just let me know and interrupt, because like I said, there's so much to fill in such a little bit of time, but I want to fill you guys with so much information that you come back with questions, right? I want to overfeed you a little bit, but I don't want to overindulge you in the whole entire thing. So, simple double stick candlestick pattern, right? We got a what we would call a bullish engulfing pattern. So we see this so you see this yellow, does everyone see this yellow line right here that runs through my chart?
Yeah.
Okay,
The 200 or the 100 EMA.
that is going to be my 9-day EMA, the yellow one. I don't know if anyone's, no offense, I don't know if anyone's colorblind, but we have a red and yellow line that runs through my chart. Does everyone see that?
Yeah.
All right, cool. The yellow line is going to be my 9-day moving average. My red line is my 200-day moving average. Okay? My red line is my support. It is my trend setter. It is what I'm looking for on the larger end of things to be bullish or bearish, and it works the same way my 9-day does, right? And we could take 9-day signals, or we could take signals off of it as well, depending on the chart. But we're going to work with the 9-day because it's a way easier to enter exit. You guys are able to take it on the 2 minutes, scalp it out, get in, get out, be confident, right? And this is what we're going to do. So we're going to see on a 15-minute share. And the reason why we do this, right? So we only need to grab 20 to 60 points, 20 to 80 points a day. When we have 20 to 80 points a day, we're able to just I mean, it takes seconds for us, right? It takes seconds for us. If you notice, I want you guys to see this. 20 to 40 points is all we need. If we were to do 20 to 40 points with one contract, let's pull up a calculator real quick. 20 to 40 points. I want you to understand why this is so deadly to just learn as a side hustle. Just wait, be patient. 9-day EMA is beautiful. We have one contract, that's $5 a tick. 4 times 4, because there's 25 cents, 50 cents, 75 cents, $1. 1 point is 4 ticks. That's $20. Times that by 20 is, oh, whoops, I clicked somebody else. How do I get back to the other? There we go. We go 20. So let's say we said we want to go 20 points, right? That's a short scalp. Whoops. That should be $400. 20 times 20 is 400, right? Come on now, that's 400. 20 times 20 is 400, right? So now let's imagine 60 points. That's fucking $1,200, okay? And how long does 20, 40 points, 60 points take? Well, if we're looking at this market, let's say we're at 143. If we look over here to the right where my marker is, it's kind of moving. 144, give or take, and it runs all the way to 184. That's a 40-point run. Right? That's $800, right? So we don't have to take that full run because we can add contracts, which means now we can increase our leverage and make $10 a tick, which is $800 every 20 points. So do we need to run the whole time? No, we don't. We can move ourselves out of the play and get in and out quicker. So each one of these candlesticks is 15 minutes, right? So this is what we're looking for. We see a signal. What is a signal? A signal is any candlestick that closes above the 9-day EMA. Does everybody understand that?
So it doesn't have to tap the 9-day. It has to close above it or below it.
Close above it or below it. That means the wick is not acceptable. The body, what is the body? The open and the close. I didn't say high and low. I said the open and close. You see it right here. We see it right here. You see this candlestick right here?
Yeah.
Okay,
Yeah.
you see the one next to it, right?
Mm-hmm.
All right, now I want you guys to pay attention because we have, this is literally really important. You see this blue one right here. I'm marking out these candles for a reason. I'm going to mark out from here to here. And we're going to work our way through this. We see a signal here. You see this body and you see the wicks, correct?
Yeah.
The body is open here and the close is here, correct?
Right.
Okay, this is my my blue candlestick is bull, my white candlestick is my bear, which is my green.
Gotcha. Red.
Which is my green and red.
Red.
Exactly. So I apologize for not making that clear to begin with. But we understand if we just understand opening and closing, we wouldn't really care about the colors. Why? Because we can clearly see it closed above. How do we know that? Well, the next candlestick shows an open and close higher, right? So we can kind of just read the chart and understand even if the colors weren't there. But we see this 9-day EMA, okay? We see a signal. We see it. What's the signal? Any candlestick that closes above the 9-day EMA. That is a signal. That does not mean we just jump in and fucking lose our money. That means what? We start looking for an entry.
That's why I'm in on this one.
He says, I'm in on this one, right? So we're looking
I've been in since you've been talking.
Nice. So our signal is going to show us that we're looking for our confirmation. And what is our confirmation? It is the very next candlestick. And it's any candlestick that stays above the 9-day EMA or below. Because if we're going into bears, I don't know if you guys realize this, but understand this. This is what's so amazing about futures. We can make money going up and we can make money going down. So do we ever have a day we can't trade? No. We can make money when the market goes up and we can make money when the market goes down. All we need is a signal. All we need is a strategy. And that is the best thing about this, right? So we see a signal that it goes up. We're in a uptrend, right? We're at the 40. It's going up. It closes. I want you guys to see this. This is our signal. It has now opened and closed above the 9-day EMA. Now, what's our confirmation? The very next stick. Okay? Our very next stick. It closed, it stayed above, right? It never went back below, right? It stayed above the 9-day EMA, correct? It opened again and closed above it, right? Yeah. So now we have what we call a strategy. We know to enter, right? We're in a bullish trend. Now I'm going to show you before we continue, I'm going to show you what an unacceptable signal and confirmation is, right? An unacceptable signal and confirmation is. All right, ready? Let's find one. All right, so I gotta find one real quick. See if I can find one because we're in an uptrend. Gotta find it. Come on. Gotta find one. Because it doesn't always work, obviously. So, and I mean, we can see the small bearish ones that happen here. It's such a scalping strategy. You're good. All right, so this is a good example of you think it's not going to happen, but it's still going to happen. This could be a great fake out right here. So again, we see the signal, right? It closed above the 9-day EMA. It closed above. And then we see the confirmation. It looks bearish, right? But did it close and stay above the 9-day EMA? It stayed above the 9-day EMA, right? So we can still enter to upside. And if we entered to upside, we would have still cracked out 40, 50 points. Look at this. From here to here. So I want you guys to understand that it's not only if it breaks above, but it's got to stay above. And at that point, we don't have to get scared, right? We don't have to get scared at all. Why? Because of our strategy. This market comes back under and pulls down. Now, what I want you to notice is, does it stay above the 9-day? Yes, it does.
Yeah.
Does it stay above the 9-day? Yes, it does. Yes. It's on it, right? Yes, it does. Okay, now here we go. Here's the bearish signal. It signaled us, right? It closed below the 9-day. So what are we looking for? Well, we're looking for a downtrend, right? Because it closed below the 9-day. So there's our signal. Closed below. The very next candle. Did that very next candle close below the 9-day EMA? No. So are we taking that 9-day EMA strategy? No, that we just caught ourselves, right? But if we flip the script and say, wow, we just signaled, so we just seen that was a false bear signal. But that same confirmation becomes our signal, right? So now, ready? Did we signal above the 9-day EMA?
Yeah.
Okay, ready? Did we confirm above the 9-day EMA?
Mm-hmm.
So we're doing what? Jump the fuck in, right?
Yeah.
Okay, so what's our exit? Our exit is the same thing. When do we get out? Okay, well, if we enter here, right, because we're going to enter here on the confirmation. We stayed above it. At some point, we're going to enter here, okay? We're going to wait for it to what? Signal and confirm, which means our trend is now ended. So you notice how we run all the way up and then it pushes down under the 9 EMA? Did it close underneath that 9-day EMA?
No.
So do we get out?
Not yet.
Nope, we don't get out. You're correct, right? So we continue to hold. Oh, there's our signal right here. Do we get out? Do we get out yet? There's our signal.
Yeah.
No, we don't. What do we wait for? Confirmation. We don't jump the bullet, right? Because what happened? Well, look right here. It signaled. It just didn't close. Same thing here. It signaled, but it didn't close, right? We don't assume the wicks, and we make sure it confirms. So we don't get out until it confirms.
It's making sense now.
Right? So now, ready? Boom. Did we close below?
Yeah.
Do we exit our trade?
Yeah.
Yes, now we exit our trade.
Yeah.
Now let's see how much money we would make off of this strategy. That is 100 right here and 77 right there. That is 23 points. Let's do the math. 23 times 20. You just made $460. Now.
Wait.
Wait, I'm waiting. What's up?
Quick money.
Quick money, right?
And this the bullet strategy.
This is no. This is my
That's
this is my
bearish.
this is my
This is
9-day EMA strategy.
I like this.
This is a
so
9-day.
that's just basically going off the EMA.
You have to go off the it's literally off the EMA, but I can't. The reason why I want you to understand this, right, is because watch this. I'm gonna break this down to you, okay? This is where single candlesticks come in and double candlesticks come in. We're on a 15-minute candlestick chart, right? Every one of these candlesticks represents 15 minutes, right? Well, I want to know more information. I want a better entry. So I'm going to show you an example right now, right? So now, this is an amazing thing called technical analysis. So I notice on the 15-minute chart, because we're not going to see anything forward yet, right? So now my trade's trading right here. This is my current candlestick, okay? I go, wow. I jumped into my day and I go, wow, look at that last blue candlestick. That is what? Does anybody know what that bluish candlestick and what we're seeing on those 1, 2, and 3 candles? Can we tell what's on those 3 candles right there? Well, on a single candlestick, that's a Maribozu, right?
Right.
That's called bullish. So now I've got one confluence. That's called one confluence of technical analysis. Bullish Maribozu. Okay, there we go. I know I'm bullish. Then we have what? Double candlestick pattern. What do we see there? Bullish engulfing. Oh, there's 2. Double candlestick pattern. Well, hold on. What's the 3 candlestick pattern? Well, I'm going to show you. This is called a morning star. So if we go over here and we go down to the triple candlestick pattern, we're going to see something called a morning star. And this is where your triple candlestick patterns come in. Look at that. What does that look like?
Yeah.
Looks like a morning star, right? If we switch back over, it looks like a morning star. So what is that telling me? Woo! We got some money to make. We got some money to make. Now I combine those 3 confluences. I combine those 3 confluences. Can you guys tell me where that candlestick closed?
It closed above the 9-day EMA.
It closed above the 9-day EMA. What does that mean?
Buys, you gotta wait for your entry.
Wait for our entry, but what is it called? It starts with an S. Our signal. Good job, babe. It's our signal, right? So we just got signaled. We have 3 bullish confluences, and we have our signal for our strategy. Boom! What are we waiting on?
The entry.
Entry, confirmation. So what do I need to do? I've got to wait until what for confirmation? For the next candle. And what should that candle do?
Close above the EMA.
Stay closed above. I want you to remember that. Confirmation is it closing above the 9 EMA. Or the signal is it closing above the 9-day EMA. The confirmation is it staying above. Because if it doesn't stay above, let's say you catch a signal that's bullish, right? But then the next confirmation signal is bearish. It closes below the 9-day EMA. You're more than likely going to get bluffed out. And why is that so important, right? Well, I mean, look at the candlesticks prior to that. We signaled and created a confirmation. That next candlestick that came, we didn't have to worry about it coming all the way back down below. Why? We were signaled. And we know that our exit strategy is what? The same entry strategy. So even if we got in, the signal was here, and then we got in on the confirmation, we would probably get a little scared. Why? Because we go from 52 to 36 points. That's a 22-point loss. That's $400. Oh my God, I'm freaking the fuck out, right? But we have a plan. Because why do we not exit? Well, we don't have a signal, and we don't have a confirmation. So we're not exiting until we have a signal and confirmation. That's our strategy. So we will hold this trade, period. We're going to hold this trade based off of this signal and that confirmation, or this bullish engulfing signal and that confirmation. We're going to fucking hold it. And we're going to hold it until it goes back over, signals, and confirms our exit, right? And it's going to be this simple. Now, I've seen this bullish engulfing and I've seen this signal. I'm going to go down to the 5-minute chart now, and I want to go in because now it's not 15 minutes a candle, it's 5 minutes a candle. Why is this important? Because I want to get in more precise. I want to be so precise that I have as minimal drawdown. What is this minimal drawdown? I want as minimal loss of my money to freak me out as possible. Because if it goes down $300, I'm going to be like, oh my God, come on. But then it's going to run $1,500. That's great. But when it runs $400 and then comes back to negative $200 and then runs $200 and comes back to negative $500 and you're freaking panicking, right? You have a strategy. You have a way to not panic, and we can mitigate that by being more precise on our entry. So instead of losing 500, we're losing 200, and we know our wiggle room and our stop loss, right? So the purple is what we've seen on the 15-minute. Notice how it's still here. So if we mark our 15-minute chart, it correlates down to the 5-minute. We don't have to redo our analysis. It shows it. It breaks it down. So notice on this 5-minute chart, remember that 15-minute chart showed us what? A signal and a confirmation. Notice how that same signal and confirmation here is in 10 minutes right here instead of 15. You guys see that?
Yeah.
That's 5 minutes because 5, 10, 15. That was the bullish engulfing right here. Didn't we engulf that on the 15?
Yeah.
Here, I'll show you guys. Ready? Watch. I'll show you guys just so you guys see it one more time. Ready? Here it
I'm
is.
actually live in this trade right now. I'm actually already up $400.
Good shit, brother. So you see that bullish engulfing right here. You see that hammer. You see that wick. You see that wick that formed. I want you to see that wick, the bullish engulfing, that run up. These are the two candles. That's the third candle, and then these are the two candles that come down for a second. Right? I'm gonna show you that. Ready? Watch this. I'm gonna show you because this is why you go precise. Right? We're gonna go right here. Whoops. That's my RSI. Right? So we see it. We see the same bullish engulfing on a smaller time frame. Right? Bullish engulfing. And then the very next candlestick. So we didn't even have to wait 15 minutes. We could have waited 5 more minutes. And we got the signal to jump in, right? And then the wick is this right here. That was the wick you seen this. These 3 candlesticks is the wick and the hammer you seen on the 15. That created that hammer looking stick. That's what makes this so crucial, right? So now we've entered on the 5-minute, right? Now, what do? We enter for upside. Notice how we run all the way up, right? This is our confirmation, so we're going to get in around here. Notice how we run up 10 to 54 points. We run up 7 points. 7 points, right? Or wait, I'm so sorry. 6 points. I'm sorry, we run up 6 points. That's $120, right? And then it comes all the way back down, minus $40. That would freak you out for a second because you just had $120. Do we exit? No. Why?
Because that's just a fake out.
It's a fake out. We didn't get what?
Confirmation.
Confirmation. And what must come first before confirmation? A signal, correct. So we always have to have a signal to enter and a confirmation to enter. And to exit, we have to have a signal and a confirmation. The signal means nothing if it doesn't get confirmed. And you will get scared sometimes. You will get scared because look, here's a perfect example. Did it signal us above? It signaled.
No.
It signaled us, right? Because it closed above the 9-day EMA, right?
Yeah. Gotcha.
What did the confirmation tell us?
That it wasn't time for entry yet because it didn't close above.
All right, next one. Same thing, right? Signaled. But what's the confirmation?
The signal one didn't close above either.
But notice on the next signal, what was the confirmation?
It closed above, and the next one closed above.
So now we're gonna buy. Now when are we gonna exit?
When you get the second signal that is going below the EMA.
We get the confirmation. I want you to be perfect on your words so you don't confuse yourself because I want to pound this in your head. I want to get this so pound in your head you understand not to make a mistake when it comes to 9-day EMA, right?
So it's the confirmation, then the signal.
No, signal, confirmation.
Got
right? If you see, put it this way, right? If we're driving in a car and you see a yellow light, what is that signal?
Slow down.
Slow down, right? But it's a signal, right? To stop, right?
Right.
And if we're going, we're going to have a yellow light to red light. So imagine our go is our confirmation, right? Well, when do we stop?
Right.
When once we're in the trade, we have a yellow light. What's our yellow light? The signal. What's our red light?
The signal.
The confirmation, right? The red light's the confirmation. The yellow light's the signal. Same thing in reverse when you're doing the opposite. Everything works in reverse. So this same exact trade can be used in a bearish situation. You have to have a stop loss. Remember, just because I'm showing you the strategy doesn't mean it's 100% win. It means you need to also manage your risk to reward. Do you understand what I'm saying?
Protect your capital.
Protect your capital. Because even if I teach you a strategy that wins 70% of the time, 80% of the time, you might be someone that makes it 30% of the time because you just don't know how to manage your risk. But let's focus on that on another day once you guys understand this. I want you guys to be able to run a demo account or be able to enter and exit a trade with confidence. So now we know that we're in on the upside, right? We're all aware we're on the upside, correct? We signaled and confirmed, correct?
Correct.
All right,
Yeah.
and then we see the hammer right here that starts to happen, correct?
Mhm.
Did it signal us?
Yeah.
No.
No, not
The
yet.
hammer is the white candle, right?
That's an inverted hammer. Upside down, shooting star. Right?
Gotcha.
This blue candle right here, this big candle, right? The last one we can see.
Mhm.
Does that close below the 9-day?
No.
No, so is that a signal?
Yeah.
No.
No.
What's a signal?
God damn it! It's a confirmation,
No.
and then the signal is the second one, right?
No, the signal is the first one.
The first one, the confirmation is the second one.
Exactly. What's a signal?
The first one.
But what is it?
It's the first candle that closes above the 9-day EMA.
Or below it, right? Because we could use this for a bear
Yeah.
strategy. But in this case,
Right.
yes, above. In this case, we're doing above. Now, what's confirmation? There's a secret
The
word.
second candle that closed.
But it has to do what? No, it's the second word. I enunciate it every time.
Below
Has
the
to
9-day.
stay
It has to stay above the 9-day.
or below it, right? So any candlestick
Yes.
has to stay above it. So we see the signal, which is the first one. The confirmation is the second one, right? So our first candlestick is going to be our signal. Does it close above the 9-day?
Yes.
So that's our signal. Now what do we tell ourselves? Aha! If the next candlestick closes above it, I'm fucking getting in and making money. So what happens on that next candlestick?
It
It's the confirmation.
It stays above, right? And it confirms. It's the confirmation. Good job. What do? We
Go
fucking
ahead.
buy.
Keep going.
Buy. We go in buying. We are going upside, right? Now, it runs all the way up 7 points and runs back down. And oh my God, I get scared because it went below the 9-day EMA. Do you get out?
No.
Why?
Because it's a confirmation.
Because there's no confirmation, right? Is that a signal? Is that a signal at all?
Yeah, it's the signal that is losing strength.
It's not a signal at all. It's not a signal at all. Why? Remember, we have a strategy. Our enter and our exit is the same strategy. In order to enter, we must have a signal and confirmation. In order to exit our entry, we have to have a signal and confirmation. Does this signal?
No.
No.
It didn't close below.
Right.
It closed above the 9 days. So we never even got a signal. So did it scare us? Fuck yeah, it scared us, but it never closed. So we never even got signaled to even try to get out. So we know we're confident in this trade. All right, well, let's keep going. We're going to go until we see a signal. Do we see a signal?
No.
Yes, we do. We see a signal.
Yeah.
It's above the 9 days.
It closed below the 9 day, right? Right here?
Correct.
Correct. So now what should we be looking for?
Confirmation.
Yep, and we should be preparing to get ourselves out, right?
Right.
Because at worst case worst, we entered at 48 and we're at 55. We've made 9 points. Worst case worst, we break even or make $100. Cool, that's fucking great. But we need to stick to our strategy, right?
Mm-hmm.
Is that our confirmation?
That's your signal.
That's my signal. So what are we waiting on?
Confirmation.
All right, well, let's look at the next candle. Do you think we're going? Are we exiting our Are we exiting, or are we closing our contracts, or are we gonna hold right now? What do you guys
Gonna
think?
hold.
We're holding.
We're holding, right? All right. Well, let's see. Ready? Oh my goodness! Did that confirm our exit?
Hell
No.
No. So even though we signaled to get out, our strategy tells us we're fucking staying in. All right. Well, let's continue to hold. Oh my goodness, we're making money now, brothers. We're making money now, brothers. Oh, it come back down, but did it hit? Nope. Still ain't hitting.
Close.
Still ain't. Hold on. We ain't even been signaled. Hold on. We ain't been signaled. Oh, we got a signal. We got the signal, right?
Right.
All right. Now, what's the confirmation?
There's no confirmation.
The close.
The close is
It's confirmation.
175. Now I want you to remember this, right? Because this is what's so detrimental. Notice how it comes. Notice this area, right? This was our signal and our confirmation, right? This was our signal and our confirmation. Don't FOMO. Yes, you could have made money, more money, whatever, right? But look at this. Watch it go back down. Oh, look at that beautiful strategy. Okay, either way, hold on. Let's go. So.
You can take it up, and then you can take that same trade right back down.
Exactly, right? Until you do what?
There you go.
Signal and confirm, right? That's why we call it scalping. So, all right. So now look, this closed below it, right? And it even continued to run down another 7-8 points, right? But then it shot back up. I don't care that it showed a blue candlestick. I don't care that it's a bullish candlestick. What I care about is it closed below that line. And that tells me to get out. And you know what the greatest thing is? The greatest thing is I actually waited all the way till the end of the close, which means I made $7 back by waiting for my strategy. Because had I been anybody to just assume, oh my God, the second candlestick went all the way down to 69. Oh my God, I'm losing money. I'm just going to exit. No, I lost extra 7 points. I lost an extra $140. Why? Because I didn't wait for my candlestick to close. I just jumped out because I freaked out. But had I just waited for the candlestick to close, sure, I closed on the bottom, but I saved myself 7 points. Does that make sense?
Yeah.
Yeah.
Some capital is better than no capital.
Right? Well, the thing is we're practicing discipline. The only way
Risk
you're getting out
management,
is
bro,
when
is
it
important.
closes. Yeah. You know what I'm saying? Because if you can fumble on the slightest of rules, bro, you'll be like me, losing $10,000 on a day. You know what I'm saying?
Mm-hmm.
It's just it's part of it. So then again, let's go. We're gonna do the strategy together now. We see that we've exited our trade. We're gonna call out a trade together, and we're gonna go. We know it started to go down, so let's skip around to a nice little random one. We're gonna go randomly, and we're gonna make. Oh, hold on. We're gonna go randomly, and we're gonna see if we can make some money together in our heads, right?
You're on top step, right?
Yeah, I'm on top step. So
Yeah, I gotta see it because I don't know. I don't know where my chart has been messed up. Like I can't put a stop loss. I can't put a TP. I don't know where I'm at, how much profit I'm making, or anything like that. It just has me on a blank chart.
we'd have to screen share together and just kind of go over it. So,
Gotcha.
all right, we're gonna look at this trade. All right, and this is gonna be simple. We're on the 15 minutes. So what we're waiting for on the 15 minute is what? A signal confirmation, right?
Yeah.
All right, so we're gonna look for any signal and confirmation. And this is easier said than done, obviously. So we see this right here. It signaled us for downside. Did it confirm? No, right? It didn't confirm. We're not going downside. So we signal.
Wait, so are we looking for right now? Are we looking for buys or are we looking for sells?
We're going to look for anything that we feel is going to go up or down. That's why I went to somewhere random and we're going to mark it out. So I want you guys to just read what's in front of you. And when you see a good signal and confirmation, we're going to mark it together, right?
Right now, uptrend.
It's an uptrend, right? We're going up. So we're in an uptrend.
Right.
We signaled for downside. Do we get out?
No.
Why?
Because it's a signal.
Because it's a signal.
Perfect. So now what you guys are understanding is, notice how we can just jump into a chart and we see what's going on all of a sudden? I wonder how I can wake up at 4 o'clock in the morning and just look at my phone and know what to do. Fucking simple, right? So we jump in, it's the random chart, We see it. Oh, man, we jumped in on the 15-minute. We got a bearish candle. It's going down, guys. Okay, well, can we assume that? No. Why? We got a signal. But do we have confirmation?
No.
Okay, well, let's see. No, we don't. But we do have a bullish signal now, don't we?
Yeah.
All right, perfect. Now, what do we need?
Confirmation that's going to continue to go up.
All right, and what's confirmation for a bullish continuation? What are we looking for on confirmation?
If it stays above the 90 EMA.
Stays. I love that word, stays. Right, here we go. Did it stay above?
Yes.
Yes, it did. And notice how we crossed that red line. So I want you to notice something. Remember how we were talking about the 200 EMA is the same as the 9 EMA strategy?
Mm-hmm.
Okay, I want you to understand. What did I tell you about the 200? If you go back, I tell you it was your support line, right?
Yeah.
So did you just tell me that on the 15-minute, a major support just got crossed and tested and supported?
Yeah, because of how much pullback that had and how close it was to the opening candle.
Right, and you see the 200 EMA and the 9-day EMA. The 9-day EMA just crossed the 200.
Crossed over.
So we just found major support, and we have confirmation on our signal. So what are we gonna do?
Hold.
We're entering, and we're fucking holding. And when are we gonna get out?
We get confirmation.
When you get your signal,
When we
and then you get your confirmation.
Perfect. So we're gonna look for an exit when we signal for it, but we're only going to exit if we're confirmed to. Ready? We are at 800, 24,800. I really want to see how far this runs on a 15-minute scale. So ready? Boom. Should we get out?
No.
Okay, let's go. Should we get out?
No.
All right, well, I want you to know that's 120 points you guys just called out with me. Do you understand that's $2,500 fucking dollars you guys just made and an hour and a half with me?
Holy.
You just did that. You just did that, not me. You guys did that. You called the signal. You called the confirmation. All I did was show you what you're doing. All right, well, are we getting out after 120 points? Most people are going to take the 2,500. Great. But do we need to get out? No. Why? It doesn't.
Because you ignore confirmation.
Perfect. And we're staying disciplined. Perfect. Beautiful. I fucking love this group right now. All right, here we go. Oh, my God.
It's still going.
Hold on. You guys just made 200 points. There's $4,000. That's $4,000. Did we signal?
Yeah.
No, we didn't signal.
No, not yet.
So are we holding?
Yeah.
We're fucking holding.
Yeah.
Oh, we signaled.
Mhm.
Oh, I'm tripping.
Did we signal to exit?
Signal, we need to look for a confirmation now.
All right, so now we're up 200 points, and we finally signaled for an exit. So now we should be looking for what?
Confirmation.
So we know to get the fuck out the trade, right? We don't want to lose no money. All right.
Correct.
Well, I don't know about y'all, but 2,500, 200 points. No, we're out. Isn't that confirmation underneath? Anything that stays below now?
It stays.
I don't know about y'all, but you just
I'm
traded.
done for the day.
You just done for the day. You could be done for the month. That's a month paycheck. That's $4,000. Because the thing is, remember, if we have this strategy, we can use one contract. One contract makes you enough money. Once you make enough money, you don't change or hold on longer. You don't change nothing. You add a contract. You just add another one. You instead of having one contract that makes you $20 every point,
Yeah, 3.
you have 2, 3, 4, 5. Now all of a sudden we're making $100 a point. That was a $20,000 trade. The same way it was a $2,000 trade. So do we change any bit of our strategy? No. We amplify our risk. We increase our contracts. We don't change anything. We literally just put in more money. We risk more, right? Now the thing is this is the best part, right? I've got to teach you guys the safety net of safeties, right? Because as much as there's a confirmation and signal to exit, Well, what happens when I enter the trade? What happens when I enter the trade like this and I need a emergency stop loss? I need an emergency stop loss, right? Just in case it just fucking pounds me out, because realistically the market is market. At any point in time, you could have a 500 point down candle, 500 point up candle. You could really fuck yourself. So you always want to have a safety. For me, my safety is $300 usually when I'm playing smart. If I'm playing really, really smart and precise, I get nervous losing $300. You know what I'm saying? Why I lost 10 grand in one day, I'm a fucking idiot, right? But that's a part of psychology, and that's just a part of trading. It takes money to make money. You're going to take bigger risks as you start to make more money and you get more comfortable. It's how you're going to go to the next level. But the biggest thing is we enter on the confirmation. So our confirmation is this. Now, with me being the confirmation, every candle, and you'll learn this later, has an equilibrium, which means the 50% zone. The 50% zone is going to be the halfway mark. So when I see this confirmation, I'm going to wait for the next candlestick to pull back into my candlestick a little more. And if you notice, we pull back further, but I would get tagged in around here. So where you see that red line is where I would be tagged in at. My stop loss would be a liquidity imbalance or an external low, depending on the chart. So my stop loss would have been either here, which we hit, possibly hit, I don't know, right? Or it would have been here, somewhere at the lower end of this imbalance here. And the reason why I say I would more than likely go here is because I do trade liquidity imbalance, and this zone right here is considered what they call, and there's two names. You have a liquidity imbalance, right? Or a volume imbalance, or you have what they call a fair value gap. So again, all of this stuff...
I was just listening to things about fair value gap.
Exactly. And all of this stuff is the same fucking thing. Because if you go to the left a little more, there's an inverse fair value gap. Cool. Right? Amazing, right? All of that is just a different name for the same fucking words. It's just a different name. Call it what you want to call it. It doesn't really matter. Just understand how it works and how it's utilized. These are areas of liquidity. These are points of interest. Points of interest, POI, right? These are areas you can get in at, right? So let's just say you wanted the fair value gap and you didn't use the 9-day EMA. Well, newsflash, you hit the fair value gap and still went in for upside and went up, right? Same fucking thing, different strategy. Multiple strategies will get you to the same thing. There's more than one way to skin a cat. And it's just that simple, right? What I'm here to do is I'm going to teach you a language. The same way they teach all fighters to box, all MMA fighters to do anything else, I'm going to teach you simple, right? Dude, when someone is boxing, when someone is learning to fight, right? And someone's practicing and someone's doing all of these things, right? Fighters are going to practice jabs over and over and over and over and over, right? They're all going to practice jabs. It doesn't matter where you go. When you're training, you're practicing jabs, you're practicing hooks. For baseball, you're practicing grounders, you're practicing your pitches, your fastball, your curveball, you're practicing your hitting, you're practicing hitting opposite field, you're practicing hitting that field, right? You're practicing those things, right? But what is different about you? Well, the way you stand, your style, right? Your style is what you are. What I'm going to teach you is fundamentals. What I'm going to teach you is how to throw a jab. What I'm going to teach you is how to catch a ball, how to hit the ball. But what you're going to do is spread your legs wide or stand close or stand on the back knee. You're either going to combo with a left, left, right, or you're going to left, right, left. Like, you are your own fighter. You're your own style. So what I'm going to teach you is fundamentals. What I'm going to give you is these basic things to where you can start just hitting the punching bag, hitting some grounders, throwing some, pitches and fastballs. I'm getting you working into this training. And eventually you're going to start throwing combos and hitting home runs and triples and, stealing bases and doing all these things because you have your own style. You're not going to sit here and tell me Mike Tyson and Floyd Mayweather, whatever the fuck his name is, fights the same. They don't. They have their own style. But do they practice his jabs every day? Do they practice hooks? They practice all of it, right? But they don't fight the same. Nobody fights the same, right? So, and that's the best part of it. So I would say we're coming down to the hour of it. I think you guys got the understanding of the confirmation. I want you guys to really put this 9-day EMA. And then when you see it on the 200 EMA, know it's a really, really good support line, right? And understand, just because I'm giving you the strategy does not mean you're going to 100% win. It just means you have an edge against the market, right? If we're sitting here gambling and I tell you we're going to gamble, you're going to expect 50-50. When people tell you the market is gambling, they're saying it because you have a 50-50 chance, right? Well, I don't know about you, but if you were to tell me, hey man, I want to gamble you, it's a 70-30 chance, I would look at you and say, I'm not gambling. Right? So, and you would ask me, well, why not? I would say, because the odds are in your favor, man. You're going to win. You got a 70% chance to win. I got a 30% chance to win. So if that's the case, I need a 1 to 5 risk. If I'm going to wager $20 and it's a 70-30, I need $100 back on this 20 if I win. Right? Because you're not comfortable with unless it's 50-50. And let's just be honest, if you're in a 50-50 gamble and someone cheats by adding an ace of spades to their hand, you're going to look at him and go, that's cheating, bro. I'm not comfortable gambling like that, right? Well, newsflash, the market's not gambling. Why? You can take all of the studying, all the cheating, all the knowledge you have, put it in your favor, and the market doesn't bitch. The government doesn't bitch. It's in your favor. You can increase the odds as much as possible. Make it an 80%. Make it a 90, 95%. Put the odds inside your hand as much as fucking possible. Nobody cares. It doesn't matter if you win 20% of the time as long as you're profitable. Put the odds in your hands, period. Right? So, with that said, I'm going to give you guys your homework. Your homework is literally going to be, I think everyone has the book. Go over chapter 2, 3, and 4. Learn your candlesticks. The next time I talk to you, I want you to be like, Daniel, that's a Maribozu. Oh, look at that spinning doji. You know, look at the gravestone doji. Look at the dragonfly. Look at this bullish harami. Look at this bearish kicker. Because that's the language you're going to use every day while you're in trading. That's literally the language you have to learn. If you want to sound fluent in any type of trading, you got to know those basics first. You can't read delta, gamma, theta, vega in options. You can't read open interest. You can't read market capital. You can't read EMAs. You can't read none of that until you understand. Why do I say that? Because I showed you in the beginning. You have a Maribozu, then you have a bullish engulfing pattern, and then you have a morning star. Notice how those 3 candlesticks tell me what's going to happen next, right? So even when I'm getting signaled, I see the morning star, I'm so much more confident that the next candlestick is already going to confirm an upside because I'm in on a morning star pattern above my 9-day EMA already. I've seen the play before I even seen the play. I'm so confident with it. You know what I'm saying? And I already know when I'm going to exit. When am I going to exit? Well, I have an emergency stop loss, but I also have a strategy to exit to tell me when I need to exit. You know what I'm saying? So I'm managing my risk. And that's what makes this a career. That's what makes this possible. Because you're able to take the money you make and put a leverage on it and make money sitting at your fucking phone or your computer or anywhere else. You're able to buy back that time that you spend and labor going somewhere else. You know what I'm saying? That's literally what we're here for and we strive to. We want to buy back our family time. We want to buy back that time that the government steals from us having to work this 9-to-5 job. And the first step it's going to take is you learning these candlestick patterns. It's going to be learning what an open and close is, learning the highs and lows, learning how to understand what it is. And once you guys understand that, I can teach you candle range theory. I can teach you how to understand candlestick momentum. And you're going to use these things to add to your strategies. Do you guys notice that sports teams have more than one playbook? You have an infield shift. You have blitz. You have whatever the case is, whatever, right? But let's say you are in a football game and you're running a Hail Mary, and all of a sudden that Hail Mary you see the defense team blitzing. You call it audible, don't you?
Mm-hmm.
Okay, so then let's just say you're looking for a 9-day EMA strategy. And the 9-day EMA strategy just isn't giving you a good signal or feeling today, you're going to call an audible. So with these things that I'm teaching you, I'm also going to teach you multiple strategies. Why? So that you're able to make money every day, so that you have a playbook when that blitz comes. You have a playbook when that 2-3 zone's being played and you need man-to-man pressure, right? You know that this is a strong hitter or this is a bunter and we need an infield or right field shift. We need to, to lay back a little more. We know those things because I'm sorry, 1 second, Roberto. Do you know what the indicator is called for on top stock? It is going to be an exponential moving average or moving average exponential, Berto. So, and I think I think you guys have like You guys did this really well. I think you guys took onto it really well. I'm gonna save this video. I hope you guys don't mind me recording, and I'm gonna actually post this, and I'll send it to you guys so that you guys have access to this video. I'll probably post it to YouTube or whatever. Send it to you guys.
I was just about to ask if you could send it to us because
Man,
that's like watching video. That's like watching film.
Hey, look, I'm happy. Did you guys understand it? Was it easy? You guys enjoy it? This is
Yes.
one
I
of
would
my-
never. I have a question. I got one question. Right?
Yeah, what's up, man?
I understand it, but how do you know when to put on the yellow line? That's my real question. That's the only thing.
You said what?
I get everything. It's just that yellow line. Tell me when, like, how
How do
to
you put the yellow line on there?
Yes. Like, how do you know when to put it?
What do you mean? How do you know when to put the yellow line? The yellow line there is always there.